Welcome back. Time for Under 30. Let's talk some Pinterest. This is a name we've talked about a lot lately, Jenny, and I think for good reason. I think that some of the sentiment that seems to be popping up in analyst commentary is a lot of the sentiment that we've personally suggested with this particular name. Not to say that it's a good company or a bad company, but it's just a little different than some of its peers that it's often compared to.
Yes, and I think different in the best way possible, where it does seem like right now a more stable source of advertising revenue, which is a huge benefit for this very tightened advertising market. But we did see a Barron's writer today saying it's time to put the pin next to Pinterest's stock, which I had to read more on that. That actually is a good thing. It translates to they think that right now Pinterest is becoming growingly more important and interesting. So here to tell us more now on that story, I'd like to welcome in George Tellis, senior markets correspondent for the network. George, this analyst feels very optimistically about Pinterest, and Pinterest has been faring not quite like the outperformer Meta has been, but up about 14% on the year.
Yeah, it has. And in fact, what's interesting about Pinterest, I'm just going to look at the charts first that you brought it up already, Jenny, but Pinterest over the last 52 weeks is higher by about 20%. And you can't say that for Meta. We know that Meta has done very well on a year-to-date basis, especially at the end of Q4 of last year. But even Snapchat is down over the last 52 weeks. So that's sort of telling. I think if you just consider what the market opinion of Pinterest is, like I said, higher by about 20% over the last 52 weeks. But nonetheless, one of the things that the Barron's writers and the analysts there talked about is they actually see some of the user growth moderating for Pinterest, and that's not all bad. One of the other things they talked about, and this is what the other analysts are also looking at, is looking at monetization of users, which seems to be improving for Pinterest, which is really sort of a visual inspiration platform. It's more of an ideas platform versus a products platform. And ideally speaking, they really focus on results from search, and a lot of times people go to Pinterest because they're there because of a particular search, and they're actually targeted on that platform for particular reasons, which actually makes the monetization tracking a little bit easier than, for instance, traditional e-commerce sites, which again don't necessarily know how much to spend in terms of marketing to justify the monetization rates. But nonetheless, if you look at the last year, performance has actually been quite well. The company does rely on digital ads for about 2/3 of its revenues, but one of the stories behind Pinterest is not necessarily just its domestic growth, but international growth. International growth has actually been relatively modest since the company's inception, but now they're starting to get more users internationally versus domestically, and that's actually a very good growth trajectory or growth avenue for the business, which again seems to be increasing its user base from the standpoint of globalization.
Yeah, well said, George. One thing that I would say, too, is we'll sort of set Meta off to the side because I think they've sort of threaded the needle in the best of both worlds. Giant user base, really effective ad model as well. But let's just talk Snap and Pinterest. I think they're on opposite ends of the spectrum. We do this every time. Snap has a huge user base, but they have trouble really making the ads make sense on that platform. Pinterest has a smaller relative user base, has trouble growing that demographic, but is a really, really effective way of presenting, why advertising on their platform can be beneficial to your company. And while it's a smaller number of people, the intent behind those viewers and those people who will see it is much, much higher. Conversion rates are going to be better, naturally. Using another way, we're just talking movies. Super Mario, huge demographic. It's not that great of a movie probably, but it's going to have a lot of people see it because families can go. Air, maybe it's a better movie, but a little kid maybe doesn't have any interest in how Nike and Michael Jordan, decided to make Jordan shoes. So, George, what are your thoughts on where we go from here? How can Pinterest do what Meta did?
Well, I think one of the interesting things about Pinterest is that, like you mentioned, it doesn't have a large user base, but I think the quality of the user base is actually what's meaningful for the company. In terms of market capitalization, it's not a very large company, around $19 billion. I think it's a situation where, one, they didn't actually show constraints in operating cash like Meta Platforms did last year. Snapchat has always had a problem with operating cash, whereas actually Pinterest in the last year has shown operating cash improvements. So in other words, it looks like from a company standpoint, they've actually been relatively conservative, if not targeted, in their capital expenditures. And the ad revenues that they generate are a bit more easy for tracking purposes, which advertisers like because they can actually focus on targeted marketing. So my point is that despite the user base, which isn't very large, it's the quality of the user base and the monetization rates that seem to be improving for the business. And I think that's one of the reasons why, Barron's is really covering the stock, and also just going back to the beginning of this conversation, why the stock has actually performed quite well in the last year. I mean, I look at the way the market tells me information, and the information I'm getting from Pinterest is, if you look at the last year, it's steadily increasing in terms of price. And that gives you an idea that its expenses are in line. It's still not profitable on a net income basis. It is profitable on an adjusted basis. In fact, if you look at last quarter compared to the expectations on a forward basis, they've increased their earnings expectations on an adjusted basis by 20 cents to 79 cents from 59 cents. And its net income margin is negative 3%. So it's close to break even. So if it actually shows some improvement in the next couple of quarters.
So George, seeing some optimism in Pinterest. So I think that's exciting to, going forward, to look at this name and see to continue an improvement in its fundamental stories. But we'll leave it there. George Chillis, Senior Markets Correspondent for the network.